The soaring profits, as always. Tonight, again, using some of this new piece of technology that we have here, kind of exciting stuff. We'll take a brief little overview and see what the world's doing in the market today. So when I pull this up here, the chart that we're looking at right now, oh, by the way, hi, James.
Hi, how you doing?
Don't sound so excited. So the chart.
I can't wait to learn more about my finances and the way the world's crashing.
Don't sound so sarcastic. So basically what we're looking at here, the first thing we're going to pull up here is the NASDAQ, right? So this is the general market overview of what's happening. And remember, we've talked about this a couple times before. We've had some of these trend lines, and then I drew a bunch of weird stuff in here. And what we did is we've kind of mapped out exactly what we're saying here. We actually fell a little bit lower than I had expected here because these funny lines that I drew, it's kind of where I expected it to pull. However, this was my movement line. Remember we talked about the head and shoulders pattern that we talked about before? Okay. If I was to almost to the pixel zoom in on that, that's where it hit. It was 3 days earlier than what I had predicted, but that's where we hit. So we got a little bit of a run back up here. We've hit some strength. So I'm going to feel comfortable in adding a trend line across here to call this our new bottom. Okay. Now, do I think this is a new bottom for our market? I do not. But what I do think is we're going to hit this bottom, this support line, because we hit it once off this chart pattern, right? Hit it again, got support and running back up. Where are we now? Well, if you look where we are here when we charted this the other day, this 12,644 line is right where we are today. The market closed today at the 12,644. Okay. My line is at 12,642.10. That's my line. 12,642.10. I was $2 off my prediction for the resistance level. And what did we see? It went up, went past it, pulled back. Okay. This is, again, where I'm seeing this trend continuing. And the reason I say this is that going back to technical analysis, we're seeing this is a high. Okay. Then we see a lower high. Then we see a lower high. Then we see a trend reversal. We have a higher high, a lower high, a lower high, a lower high, and now we're seeing a higher high again. Is this a trend reversal? This is the situation, folks, is that has the world changed? What's changed? So Joe Biden today, we talked yesterday on the live that we had last night.
Right.
Joe Biden and the Fed chair, Jerome Powell, met today. And do you know what happened? Nothing.
Nope. So he did not come in with the hammer as you predicted, as you said that they should come out, swing the hammer, and knock us into.
What happened today is that Joe Biden had a press conference, if you could call it that, the weirdest press conference that I've ever seen. He had a press conference with an empty chair.
Oh my God, he went back to, what's his name?
What?
Remember the actor? It'll come to me. Keep going.
Yeah. So he has this press conference where Jerome Powell, who usually speaks, he's the face of the economic growth of the nation.
Yeah.
Met
the
with
expert, if you will.
Sorry?
The expert, if you will.
Well, that's exactly it. So Joseph Biden decided that he would do a press conference without Jerome Powell today. And he said about 3 sentences, of which I'm summarizing, is that he said, I'm going to leave Jerome Powell to do what Jerome thinks is best. Then all of these reporters asked a bunch of questions, and the press people for the White House ushered them quickly out of the office. It was it's worth a Google. It was the most mundane interview I've ever seen. But what it did is it didn't tip the market. It didn't tip our hands, right, into what's happening next. But what are we expecting? What do we think? Okay. If we go over here and we see this area, this is where the market is listed, right? So when we scroll through here, we're still seeing a majority red, right? Yeah, you're seeing some green speckled in there, but we're still in a downward trend. We're still in a bear market, right? So let's take a quick look at some of the favorites, right? Let's go up here and see what Tesla's doing. Tesla had a great day today. Bounce back, collect support, right? But where are we getting back to? We're getting into that resistance level again. Okay. So all of these stocks right now are sitting at this precipice of what happens next. I'm going to go out on a limb and say that probably over the next 72 hours, you're going to start hearing reports of something coming, right? Whether it's increased fighting in Ukraine or whether tensions in Taiwan or something's coming. Why? Because all of these markets are at this pivotal point of support and resistance. And right now, the government has a vested interest in pulling back on the economic power strings. And you got to think like, well, why would they want to do that? It's because they need to stop inflation. They need to take money out of your pocket, right? And this is where, again, if we understand this stuff, we can plan for it. We can look a little deeper into why and what and how we can set ourselves up for the best possible footing. So that's my prediction. I think over the next probably, I'll give it a week, that there's going to be something hit the fan again. And that will give them the opportunity to get gas prices back up. It's gas prices here. Let's take a quick look at gas prices.
I think they're down a little bit, but a fraction of.
Right.
They were not a whole lot, but gas prices on the market, I'm not sure about.
Right. So gas prices right now, remember we talked about, we're at 115.31. What did we see? We saw a bull pennant. Anyone that's been following me, right? This is called a bull flag. We came up, we came down, and we're coming back up. This is where we're going to end back up here. And that's when I roughly said, I think if you look back, I said by about July 1st, we should be back, or earlier, we should be back to that $130 a barrel.
Yeah, I remember you saying that. Yeah.
But why? Like, I don't have a magic 8-ball. It's technical analysis. When you do this, there's thousands and thousands of computers that are trading this algorithmically. And all this is follow the technicals. So if you can understand these technicals, you can start making assumptions. Are they perfect? No. But you can make assumptions. And that's what we're doing, is we're trying to give ourselves a 50-50 chance, trying to make it fair for ourselves. If I was to ask James what he thinks Boeing stock is going to do, the plane company, right? Boeing, on vacation. Everyone's going on vacation now, right?
Yeah.
What's it going to do in 2 years?
I have no idea.
Right. Let's take a look.
No idea. There's no way I could even predict that, because so many things could happen in the world. If war breaks out, it'll affect tourists. If another plague happens, I know that monkeypox is coming out. It's supposed to be big. It's going to be huge. Who knows? The whole world system in the next 2 years with poverty, and it could change.
Right.
But if you do what Pat's doing here,
let's take a look at it. Okay. So that's your 1-year chart. Okay. This is your 5-year chart.
Ooh.
Okay.
I wonder if that big drop is when Boeing had trouble with their planes.
100%. When was that? This is COVID 2020.
Yeah.
Right?
Oh, COVID, right? Yeah.
You can start charting this stuff, right? There's your resistance. Your top resistance at 443. You're currently today at 131. Okay. What is this? If you were to chart this over, this is just sideways movement, right?
Right.
Let's go back to all. This is going to give us a huge long time, right?
Wow.
So upward trending.
Yeah.
Slowly but surely going up, but very volatile. Like this was a stock that you needed to have. You need to be on. Right. You need to be in and out of it, right? Then we get this big movement up. Okay. Well, why is this? Well, there's a ton of money coming into the market, right? Got tons of people starting to buy.
That was pre-COVID, and as I recall, pre-COVID, it just seemed like there was a lot more money lying on the table. Like you had more to spend. Gas prices were down, food prices were down. Just before COVID, it was kind of like that joyful era where that you could use your money and you could go. I know I could travel and go do things.
Trump wasn't that bad a guy.
Yeah.
No, but that's so when you start looking at this, you
Oh,
can
I fell right into that.
so do your trends. This here is an anomaly. Why is this an anomaly? Right? It doesn't fit the rest of the lines.
No,
Okay, so don't chart it. Keep it out
right.
as an anomaly. So you're going to chart this off. Let's do a really quick one here. We can do a really quick one.
Yeah, if you take that out, you cut that super high out, it does just kind of bounce up predictably.
Right.
You can really see it when you look at the full forecast there.
Right.
Yeah. And even the bottoms, it really does bounce off that line.
Right. So let's get this a little bit straighter to hit these.
Right. So you're cutting out the two higher ones because they are not in
They're
the
not right. So
yeah.
this right now, COVID, right?
Mhm.
So you've got COVID sell down, you have COVID run up. So it broke through the trend, right?
Yeah.
This is a lot of money coming out of and then going back into during COVID. So now what is the trend line? This is the trend line. So if you were to ask me in 2 years, so let's go to 2025, okay? I would say that $200 a stock for Boeing seems appropriate on its high end. So anywhere between 140, because it's sitting at 131 now, and
Yeah.
203. Okay. So it needs to get a 33% increase approximately over the next 2 years to get there. Boeing is not solving cancer.
No.
They're moving people.
Yeah.
Like a bus line in the air.
Yeah.
So to have 15% growth, that would be the rebound out of COVID, right?
Right. Yeah.
That seems logical. Is Boeing going to invent a time travel device that they can soar across and do all kinds of crazy stuff? Well, then we'll get back up here, right?
Well, they might invite a faster jet or something, but
Sure.
without all of that, yes, it'll probably just continue on.
Right.
Going.
So you can start looking at some of these companies longer terms. Like, what is that one? US. That says because it's Trading View. That's the 20-year bond. Okay. So this is the price of debt in the United States. Okay. What is the price of debt doing right now? This is such an interesting thing. If you can understand this, folks, this is huge. Okay. When you go back into 89 and 90,
So just backing up just slightly for us remedial learners.
I'm going to
So
bring you
that is bond sales. That's when you go and you buy a bond from the U.S. government, and
Yep.
then you say they will give you like, I think it's like 1% or something. It's not very much,
So,
but it's safe because you're
right.
not going to lose money.
Right. It's government debt. So here we are right now. We're going to go back in here to 89, 88. Remember interest rates in the 80s? I don't, because I was at this point, I was 2.
I do remember. Yes.
So where were interest rates?
80s is when I bought my house. So
In the teens, right?
yeah, they were in the teens. Yeah.
So right now you got interest rates up here at just under 10%, the bond yield, a 20-year bond yield. So if you gave the government X number of dollars, they would promise you over 20 years, they would give you 10%.
Right.
There's a lot of people that would buy that.
Yeah.
They don't trade. They're very low risk. They're retired. They need safe money. A lot of people will buy this.
You don't have to watch it.
You don't have to do anything.
No.
Guaranteed money.
Yeah.
So, well, what do you see?
Back then, to tell you the truth, I bought Canadian bonds. I bought a lot of them back then.
And at the time, you were told that that's a smart, safe investment.
Totally.
Right.
Yeah.
But if you have an interest rate, a yield at 10% for just holding money, if you go to the bank today and you say to them, "Hey, I'd like to put my money in your account," what are they going to give you?
Not that. Not even close. Yeah.
They're going to
In fact, they charge you service fees that probably negative.
You're exactly right.
Right? Yeah.
So what we see here is yields are what are called bond yields are what are called inverted. Okay. So the more popular bonds are, the lower the yield. So if you buy Tesla stock, if everyone goes out and buys stock, the price goes up, supply and demand.
Right.
Bond yields are inverted. So the more popular bonds become, debt. That's all a bond is. A bond is a promise that I'm going to pay you back. That's my bond.
Yeah.
Right?
So the government gets to use the money that you're putting in for whatever they want, but they have to pay it back to you when you ask for it.
When the time expiry. So
Yeah.
this is the 20-year bond, okay?
Right. Yeah.
But what you see here is you see a direct pattern deteriorating. Let's chart it. This is why I'm very confident in the housing market, okay? We're going to chart the tops. Is it kind of scary that they all touch?
It's pretty straight line there.
Right?
Yeah.
So what are we seeing now?
It's a downward trend.
Massively downward, okay?
Whew, I got that.
Downward trend, massively downward. So debt is getting cheaper. People are buying it. Therefore, the price is driven down, okay? But when we look over here now, what do we see? We've broken out of the all-time pattern.
Right.
So what can we start to expect here? We've hit its resistance. What do we know now? That's got to come back.
Right.
Right? To follow this trend,
it's got to go back down.
It's got to pull back down.
Yeah.
Or this is the scary part. Or it's going to start a new trend, and then what are all times high potentially again? 10%. Right? Okay. So this is where if you take this and you think about housing, interest rates, mortgages, the rates that go along with those, car loans, that sort of thing.
Yeah.
This time here, those rates were in the high teens. These days down here, they were like, you want money? We'll give you money.
Yeah.
How much money? Right?
How much would you like? Yeah.
Right. If we go back up to this, the game's over. Okay. The reason I say that is that these high teen rates, your property or your car or your investment that you were purchasing, the asset, was a fraction of what it's worth today.
Right.
If you were buying a house in the 80s, late 80s, you were paying probably sub $100,000.
So I bought mine 91. It was $111,000
for a beautiful family home.
Beautiful family home.
And in 91, what month? Do you remember?
Probably around March. I do a lot of things in March. I don't know what.
So in April.
Oh, you know what? No. It was September. It was just before my daughter was born.
So in September of 91, you were at a 6.2, we'll call it. 6.1, 6.2.
That sounds familiar. I think because I went through a credit union, I was 7.
Yeah. You were one whole third off of the highs. Okay. But you paid $111,000.
Yeah.
Okay. At a 6, and let's call it a 6 1/4, 6.5.
Yeah.
Okay. Your house now is worth $1 million.
It's worth a lot. Yeah. No, absolutely. Yeah.
How do you go back to 6%? You don't. You can't. Because your house is lovely.
Yeah.
The guy that's paying $3 million.
Oh, I don't know how you do it.
They don't,
especially since because interest rates are low. I know people who have overextended themselves to a crazy level. They went out and they bought the brand new car. They went out and bought the $1 million home. They're just constantly paying back the bank for everything. They own nothing. They own the boat, And if those interest rates go up, even though they have a good job, it'll crush them. One more straw in their camel's back, and it'll break them. Car breaks down, house needs a new roof.
Yeah,
I don't know how they survive that, and that could be very crushing for our economy.
100%. Well, this gets scary because you have what's called the 2-year, 10-year, or even you can do different year bond inversions, where the short-term bond, their value is worth more than the long-term bond.
Right.
What that is people are saying, we're going into a recession. We're going into a crazy time right now. I'm willing to pay more for short-term security because this could be ugly than I'm worried about if I'm locking up my money for 20 years.
Right.
If I'm going to invest in something for 20 years, you better be paying me, baby.
A lot of money. Yeah.
There's got to be return, right?
Right. Yeah.
Because security. and this is where we talk about, this is not financial advice and all that sort of thing, right? And I didn't know your risk tolerance. My risk tolerance is very high, right? I'm a young man, many years before I need to retire. The money that I'm putting into the market right now, if I lit it on fire tomorrow, poof, I'll go make it again. It's not a big deal, right? Whereas if you're 65, 75, 85 years old, you're going to the bond market. It's secured. It's easy. If you can get 10% on a 20-year bond, you're dead. Right? You don't even worry about it. You're there.
Yeah.
Right. Yeah. But this is where we get scary, guys. And this is where we've talked about the recession stuff before. And these are some of the indicators. So when we go back, pull it up again. Can you see me moving there?
I can. Yeah, you're good.
So when we see this, we are expecting that we are going to top out again at that. If we chart this across, this is where that line would go, right?
Right.
And that's going to be a resistance. So what we're thinking is that we're going to hit this, bump our head on it, and pull back down. And we're going to call this another COVID anomaly, right? This whole thing here is going to be just a COVID anomaly.
Sure.
We're going to get back into our trend, and we should continue trending this way, right? Because we can't. If the government went to 9%, they gave out $7 trillion.
Right.
How do they pay for that?
Can't.
If we go back to 9%, I'm telling you right now, if we go back to 9%, World War III happens like that because they got to get out of it, baby. They got to figure out a way to go over.
They got to make money quick.
They got to take over. They have to take over a nation. It's the only way they can do it. But the problem is that COVID as a global pandemic, and I don't like it. But the problem is that the whole world did it. There's no one that wasn't affected by it.
Right.
Where do you go to get your money back?
Some countries were affected worse than others. So in some of the countries that we normally get money from, like China, like right now, China's in a very terrible situation. And that is where America and Canada have borrowed money.
Where do you go to get it?
Yeah.
It's a scary time. And that's where I'm saying is that there's a lot of lucrative opportunities right now. And I think that what we're doing is we kick the can down on our future a little bit. So we let our children right now are going to be eating off of the reserves that we spent during COVID.
Right.
And that's problematic, right? You've got young kids that are, becoming young adults and are doing their own thing.
Yeah.
We leverage their futures. And that's, I worry about that just for the simple fact that if we don't do something in the very near future, or we continue down this path that we have right now, debt is the least of our problems. You're going to see social conflicts and social strife like we've never seen, which kind of
currently right now on a micro level, I have seen more thefts in our community, more car break-ins, more of all of that, more homeless, more people destitute on the streets. And I think that's all a very clear reality of what's going on, like the reception part of it, where you can't afford food and you can't afford rents, and like just the rents, which is great for you and I, but the rents are getting astronomical.
Yeah.
It's just all of that combined, it could turn into a scary place. And I hope, I'm a liberal guy. I believe in social programs. I believe in helping everyone around, but you have to have money to do that. Yeah. I want to help people, but there's going to become a time in the near future that I stop giving money to homeless people, and I stop, going into the community and handing out, loans and stuff like that, or whatever I'm doing, because I gotta protect my money, and the government has to start thinking that way just for a period of time, and then we can come back out on the other side. But if we don't do that and we keep spending, that's going to be a scary thing. And that's what some of our politicians in Ontario anyway are talking about, that they want to spend more, not less.
Right. Well, I sent you a couple deals the other day. We were talking about some of the real estate deals that I'm looking at. And when you start looking at the rent rates that they're looking at in the Midwest, these are not, this isn't, Miami real estate that I'm looking at. I'm looking at multi-unit, like bigger family multi-unit buildings. You're going out in Nebraska, you're going to Arkansas, you're going to Wisconsin. Like this is not, Manhattan, and you're getting these crazy rent rolls that are coming in off these properties. So, like the deals that I look for in that kind of family, you're looking 9-10% cap rate, and And that's where you want to see something coming in. That's if you're $1 million,
you should explain what the cap rate is just quickly.
It's your capitalization rate. So it's basically when you break down all of the expenses, so the income versus the expenses, and you put a percentage rate to that.
Yeah.
What it does is it basically is a rule of thumb for breaking down a real estate deal. And it's something
money coming in from rent and money going out for mortgage, hydro, heat, all that stuff.
Then you have other things, and I'd love to do a whole session on this with the real estate.
We really should.
We should. Is breaking down deals, right, and looking at how to get into good deals. There are opportunities. There's always going to be opportunities. People need to sell homes. People, you get old guys that are retired and they've been doing the multifamily deal for a long time. They're like, I'm 75 years old. I went through recessions before. I ain't doing it again. So you got to chase people for money, right? It's not a fun time, and you feel like a bit of a prick when you're doing it. But that's part of the game. Everyone needs somewhere to live. And having a service like McDonald's doesn't come to you and be like, hey, you can't afford McDonald's. Well, hey,
here you go, have a burger.
Not the game. So
no, you gotta be smart, and you gotta like, I'm into helping out people, but I'm also into helping out my family. So like these deals that we're looking at, maybe someone is doing it because they're a little down, but you're probably helping them by getting it off them before the bank takes it, to be honest, right?
100%. And that's where if you can find those deals, wedge those deals, get in there. And there's a couple of people that I've, chatted with. I get these deals sent to me from all different real estate agents from all over the country, down in the States as well. And some of these guys are talking about, I go into little old ladies and I say to them, listen, like, you're coming up, you can't afford this. I'm willing to get you out of this deal. You tell me your terms, right? Make sure that it's comfortable for you. And these little ladies or these, these people are sitting and going like, I didn't know what to do. My husband died. I lost income. We didn't have money to pay the bills. I was going to lose the house to the bank. And it's like, I'm glad that I sold and I got out, and I even made some money to throw in somewhere else.
And right now you can make a pile of money. Like if you, like me, I bought my house for 111. So if I got in that position, I would walk out with a lot of money.
Right.
So
yeah, exactly.
Yeah. And so anyway, so it's not all bad, but I'm looking forward to really seriously looking into what we're going to do next, because I know it's going to be big.
So, and as we always close on,
let's make some money together.
I like it. All right, guys. Well, folks, thank you again so much. I appreciate your time, and we're starting to get the kind of hang of these. I think we're gonna.
Oh, I definitely am. Like,
we'll dial this in.
If you don't understand the terminology, Pat did this great explanation of the stock market. It's on our YouTube. Go check it out. It really explains a lot of the stuff he's talking about right now.
Yeah. Awesome. All right, folks, as always, from your Soaring Profits, thank you, our profiteers. And as always, folks, let's make some money together, and we'll talk again real soon. Thanks, guys.